Welcome to the Euro Trade, everyone. I am running a couple minutes late here. Apologies for that. I managed to sleep through 2 alarms. See, we've got a new photo that has me with brown eyes rather than green and looking quite a bit older than I look in real life. I don't know what's up with that. Anyways, let's have a look at what we are working with today as we work on this NFP expected Wednesday. If we are meeting for the first time, I am Market Stalker D. I have been trading commodities for, let's say, 19 years now. And I use profile, statistical averages, time of day, and gamma exposure levels to orient myself in the markets. So let's see what copper is doing first and foremost. We have a bit of a breakout from Asia. Still working with that 6 evens number, which seems to be the point of interest. And yeah, so I'm not really keen on doing breakouts at this area. If we ever go down to the breakout point from Asia, I might be interested in longs, but only if that happens well before the NFP release. Otherwise, I will be waiting until the actual release and probably quite a bit later to find any trades. All right, when it comes to the averages, let's see where the average session range high for London is located. That's at 607.05. This is something I do every single day. The ADR high, which is a full 24-hour average, that's sitting up at 611.15, so a little bit lower than yesterday. Not interval. To the downside, London average session range low is sitting at 584.70. And then the ADR low for the entirety of the 24-hour period over the last 10 days sits down at 575.90. This one I'm just going to change the color of to delineate a little bit from the rest of the things. Okay. So yeah, copper breaking out. Are the other metals breaking out? Let's see. I tried popping in a silver trade last night. Not for the Asia range. It was kind of around it was after COMEX close, I think it was, and it seemed a bit smoother. Didn't feel like it's just wagging all over the place. So I guess some of the crazy volatility is maybe settling down, at least it is in silver, but it's still moving a lot, so that's a positive thing. Maybe we put silver back on the table at some point. Alright, I have been trading RBOB recently because of the craziness in metals and obviously the restrictions that we have. So let's have a look at RBOB. RBOB is heading back towards these levels up at 199 and 2 evens. Crude oil has decided to go and tag 65 almost. We're literally there. So that's pretty high up. And it does have room to move up to 65.50 easily. So that would mean 2 evens to the upside might be on the cards today. And again, to the downside, we're still working with 195. And let's just have a look at the averages now. Oh, they're way above the 2 evens number. So the full 24-hour average is up at 201.57. Ballpark somewhere around here. So it has statistical room to run higher. I don't like being long energies because they are short bias products. And we're coming into rollover as well, so we've got about, you know, a few days before all of that really kicks in. To the downside, we are working with the average session range for London on the downside, obviously, right above that 195 level here. So I'm gonna put like 2 markers there. And then the actual average daily low is all the way down in 193. So a little lower than it was yesterday. So what is this? This is a minor, not that minor, but it's a little bit of a less strong GEX level, so it's gonna get an assignment of GEX 3 and also London session low. There we go. Value areas, we are kind of sitting in a in an area of a supply on a very large time frame, but when it comes to the values on RBOB, we do seem to have a bit of the overlap. So when I'm looking at the values from NYMEX over the last few days, it kind of went up, but the distance between that and what happened after is really not a lot. So to me, this is more looking like a distribution. Not quite a bracket, because there's no huge overlap between the values. It's just a little bit of a slowdown there. And it makes sense, right? If you're in a supply, there's going to be some people who are wanting to sell from those areas by default. So yeah, sitting and waiting what the energies do today is definitely on the cards for me. Natural gas, let's have a look at Natty. Still the same levels in play as they were yesterday, with a little bit of a flip around. So now 310 is becoming a GEX 2 level. So it was not able to confidently break that and sustain to the downside. I think there was a gamma flip level yesterday as well. But yeah, still no real commitment from the buyers either. So if we cannot break this VWAP to the upside, I'm still looking for shorts toward the 3 evens number. That remains a pretty big anchor point from the the last couple of weeks. And yeah, 320 to the upside again remains a very important area. We have room to move on the statistical side all the way up to 3 32.6. So that's what that looks like. So plenty of space to move around today. To the downside, we're looking at 292. So that's a little higher than yesterday as well. So a little bit of a skew to the upside on the volatility from yesterday. And the average session range low, which is London specific, that's actually sitting right here at the 3 evens point. So I'm just going to make this into another little level. Delete that and make it into a stronger one. Value areas on the last couple of days for Natty. We are having a 2-day bracket. Now for me to actually say that the bracket, which is basically like a consolidation, right? It's just overlapping distribution curves. I would say that we will probably need to have another day of that and then a breakaway for me to go, yep, definitely a consolidation area. Let's see if we can go higher. So for now, I'm not really looking for that to change, at least not before NFP comes out. Even though NFP doesn't have that, like it really isn't a big release on the energies. It kind of affects it, but especially crude oil because of the, the knock-on effect of why the interest rates might be changed based on this leading indicator that is the NFP. But imminently when the release comes out, like the energies just don't go as crazy as some of the other metals and equities. So it's definitely not as sensitive. So the good thing there would be that if you have any sort of setups and stuff relating to the energies at that time, you don't have to tremble too much whether you're just going to get whipped out like in 3.5 seconds. But at the same time, I still don't like to hold trades necessarily through it. I have held trades in energies through some of the NFP releases before and never felt like I had any liquidity issues or anything. So just something to consider, All right, let's see how everybody's doing. Alright, only here until 10 a.m. meeting at 10. New graphic card on stream looks great. Yeah, I'm not sure about that, Paul. They're making me look much older and they have my eyes brown and, my eyes are green, right? So I don't know whether the camera doesn't really pick that up or whatever, but, I find my green eyes are a pretty big feature, so I'm not sure about that image. And also they gave me like a lot of wrinkles around my, like I have no wrinkles around my mouth. I have some around my eyes, that's fine, but yeah, so I'm not that happy with that photo, to be honest. But whatever, it's just a picture. Nobody cares. Gold going higher, everything's going higher in the metals. Genius K says my photo looked beautiful. Yeah, I think it makes me look at least 10 years older because I don't look like that in real life or in camera. Like I look, when I haven't slept properly, I look like maybe mid-30s. If I've slept, I look more like 29. So, but I suppose they maybe didn't want, maybe they gave the AI prompt something in line with my age, like I'll create a 45-year-old woman. And to be fair, most 45-year-olds will have wrinkles. It's just that I have good genetics. So yeah, request a new photo. Well, you know what? Everything is so slow to get done because, we have a lot of people working for us. And every time you request any small change, that kind of takes forever and a day to get done. So I don't actually want to because it's just going to create like extra work for the team, and it's like, whatever, it's a photo. They want to make me have brown eyes and looking like an old hag. That's that's up to them. But yeah. Anyways, let's move on to the markets instead of Dee going into complaint mode because she's grumpy since she hasn't slept well. Yeah, so the plan for today would be to sit on my hands mostly and just see what the NFP does. Now with some of these new rules that have come in, I'm actually pretty happy that I started working on this scaling system where, you know, trying to minimize that downside while maximizing the upside to a degree. And right now the whole experiment is looking pretty solid. Obviously I can't scale up depending on the risk model that I set up, because they've limited us to only 6, and my risk model says that it's actually okay to scale up from 4 to 8 or from 5 to 9 depending on the product that I'm trading. But yeah, for now it's only been a few days, so I want to spend some more time doing this. This was just the first one, me testing out to see whether the trades even work. And then this was before they limited us, and then this is from the limit. So this is like micros, trading 4, 5, and 6. And to be fair, I haven't had that many like massive trades or anything. So we haven't run into a day where that is happening. And I'm only trading copper, RBOB, and natural gas. So Natty and copper are being traded as micros. So the only kind of mini that I have is the RBOB. And even that I don't trade like every single day, only when the good setup turns up, and then I will jump on it, otherwise I stay out. So it's looking pretty stable. That's what I'm looking for in this experiment. I'm looking for stability, minimizing downside, maximizing upside, and trying to keep everything as consistent and stable as possible going forward. So yeah, so we'll see how long it takes me to get through this combine. Once that's done, then obviously I will go into XFAs to do exactly the same thing. So there will be no changes. There will be none of this like, oh yeah, full port the combines that I trade entirely differently in an XFA. I think that breeds like bad trading decisions. And whilst you might think you might be able to shift gears really easily, I can tell you that I cannot do cannot do those shifts even after 19, not 90, although that photo makes me look like I've been training for 90 years. Yeah, sorry, that's gonna be the joke for the day, running joke. Do you look old on the photo? Yay. Favorite lives are saying, are you on again? Yes, I will be here for group coaching, guys. So not fast markets, but I will be on group coaching later. So yeah, we're gonna see if we have some end of day setups. You know, at that point NFP will be done. You know, we'll have quite a bit of data, and then you can come and hang, and I can if I see a setup I can talk you through it during the group coaching, while we also answer lovely questions. Trading NGO says, hello D, could you explain the XFA consistency 40% rule? Look, I'll be honest, I haven't looked at that document that deeply because I'm not going to be the one going for that. For me, I don't want consistency rules in the funded. I don't feel like that is beneficial for me, because they would cut me off from my big swing trades when and if I see them. So for me, it's a no. But if it's like any other consistency rule, then I do believe that at the time of you requesting a payout, no single day can go over the 40% of total profit. That's usually how it works. So hopefully that's the same thing that they've done. But again, don't quote me on that, because I need to dive into that. That document a little bit closer. So Bruno said the same thing. Yeah, so it is the same, exactly the same as any consistency rule firm out there. And it's the same as the combine, only relating to payouts rather than your combine target, right? So it's like if you equate the payout amount or the payout eligibility with the target in the combine, the rules are actually exactly the same. So just like any single day in the combine cannot overshoot 50% profits or final target, this in the same way, when you request a payout, any single day cannot overshoot 40% of your total profits. So, you know. So it's the same, it's just applied to a different product, right? And if that's what you want for, you know, the chance to get a payout more frequently, that's great. I typically, you know, when I'm doing payouts, for whatever reason, I don't really like taking payouts that often. You know, I've always been more of a once or twice a month kind of person, because, you know, I don't live on the bread line, so, you know, I'm not like burning for the next like 3 days of payout to save me. But you know, some people like to pay themselves out. There's absolutely nothing wrong with that. It's just that for me, I want to build up a little bit more balance, and you know, one monthly or bi-monthly payouts enable me to build up quite a bit of balance before the next leg starts. How many times a month do I blow accounts? It wouldn't be how many times a month. So I did try different sizing techniques in January. So January I did blow, I think about 4 or 5 of them. But before then, I don't know. Like it was probably sometime in September. I blew 1. I'm not somebody who's like, you know, buying accounts to pass them, especially not in Topstep, because, you know, there's really no point. There is no point. They are there, like everything that we're doing now, if you've read the slight adaptations that they're doing, it's to make sure that consistency is there over everything. Because they're not looking for people who are just going to be here now, gone in a month, never see them again. So they come in, make a bunch of cash, lose a bunch of cash, and then you never see them. That's something that we've seen in prop firms a lot, not just now, but back in the old days too. So that's the problem, right? And I know that we get a lot of stick for that. Oh, you're preventing me from making it. Yeah, we're also trying to illustrate that longevity doesn't come from blowing up combines every single month. So I've never been on the, what do they call it? The Focus Trader program. I did not get any hedging emails. You know, I just don't do weird practices that could be considered dodgy anywhere, because you couldn't back in the day. You know, back in the day, you just had one account. You had to have an idea what to do with the level and then commit to that idea. There was no second account. There was no 10th, 20th account. It was just one in a live market, and that was it. So that's how I learned to trade. I don't have a million ideas where I'm going to flip and flop around the same level and going long, short, and then forget that the copy trader is doing something else. And I have used copy trading elsewhere. I've used Replicanto before, but I haven't really used it on Topstep. And that's why I'm trying it now, just to see how much of a lag there is between them. I mean, to be honest, so far they're pretty good with the way I trade, but I trade slow, right? I have one trade. I keep it for a long time. Like you can see my average win duration here, 89 minutes. So that's not, you know, me kind of flipping and flopping like a fish out of water around the same level. And if you're doing that, hitting the reverse button a lot, yeah, there's going to be problems, you know. But I just want to see how it all behaves. And for me, it's very stable. Like I don't see any problems. But at the same time, I see a lag whenever I exit a trade. I see a lag and I see a slight difference in the P&Ls. And then it goes, close this one. A few seconds later, another one gets closed. And I'm like, okay, so that was a bit laggy, but to me, perfectly acceptable. So if you're somebody who is a scalper and you're a lot more dynamic in your, you know, number of trades you do, then copy trading is going to be very dangerous for you. Like, I'm sorry to say it here, but so yeah. So for me, I don't see an issue here at all, but I'm me, and I'm very, very, very mindful of when I'm in a trade. I don't get confused. I'm not like, oops, I forgot that I was short in that other account. Ooh, good. Even when I'm having, I didn't use copy trading here, so whenever there are multiple XFAs, then I'm using them to kind of separate them per session, and I'm still going to be doing that. It's just that I'm kind of testing some stuff at the moment and modifying things. I still find myself a little uncomfortable in adding 2 positions, especially when the last ad comes in at like 36 ticks on copper. Even though I'm shooting for 110 tick profit, but I'm still like, oh, put the average, put the average. And so I don't really tend to blow accounts. If I'm testing something out and I'm kind of stress testing, then there will be maybe about 4 or 5 combines for that month that go down the drain, and then I just go back to, right, this worked, this didn't work, let's keep this and carry on. Does that make sense? Yeah, so Trading NGO said 3 times $200 days payout was available, had a 600-day payout not available. Yeah, because your total payout on one day, your total profit on one day exceeds the 40% of total balance. So yeah. Do I look at option Greeks? I do. Yeah, it's a part of my calculation. So for example, you will see this little indicator there. That is, it is mine, but I basically look at a couple of things. I look at open interest and implied volatility per strike. I also look at the time decay, so how many days till expiry. And I don't go super deep into it, but I do look and make my decisions somewhat for my swing trades of whether it's the good time. So for example, if I want to short crude oil, I do want it to be at a decent amount of volatility, and I don't short crude oil intraday. I will only do it through a short call once it's up at some interesting levels. Copper is about to tag my 6 even, so let's see if we can find a tiny little trade here. So my idea here is that we tag 6 evens, maybe do a bit of a sell-off. I did have issues with my computer last night. It turned out it wasn't super serious and I managed to get it up, but again, it was a very late night, and then just as I went to sleep, one of my dogs starts throwing up, and she's been sick all night, all over the place, and I just didn't sleep very well. So this morning, we had the doggy school pickup for the other dudes and the mom, and then I overslept. I slept with both of the alarms. I woke up like half an hour before the stream is supposed to start, panicking. So that's never a good way to start your day. And then I quickly just put my face on. You can see my hair is all screwed up and everything. And but hey, I made it! Yay! And we managed to put everybody in their coats. Managed to give the meds to the Cavalier on time as well, because he's ancient. How do you change the profits on top, PDPT and all that? Yeah, so there is a new setting that I wasn't aware of, and I sort of Coach Jay's thing. So the PDLL is in this section, right? So we have personal daily loss limit, which would be your daily loss limit that you will deem acceptable to stop you when things are not going right. But for me, I don't really use the data loss limit in combines. And, these days I kind of rarely use it in XFAs as well, purely because I just don't trade that much. Like I know that on this thing, you're going to see more trades than normal. So you can see 20 trades, 8 trades, whatever. But that's because I'm scaling in. Mostly scaling in, so that the platform will be counting the scale-ins as separate trades, which is a little bit not really great, and I think they're going to fix it at some point, just not now. So for the PDPT, so it's here to the right of the personal daily loss limit, so personal daily profit target, say that 10 times fast. You have to set it to liquidate. If you still go to do nothing and then try and save that, it's just going to be like, yeah, whatever. So you have to put liquidate or liquidate and block if you want it to block you. I don't want it to block me. I just want it to cut me off at 4.5, just in case that we get like some massive run in one of the things. I don't want to forget that I'm not in an XFA without the consistency rule and then just keep going. Because then, my consistency in the combine is going to be off. And every so often, I will come down to the combine just to tighten up things. Because I noticed when my brain starts going a little bit like, oh yeah, I'm a god, I can't do any wrong. That's a really bad sign that you're going to start messing things up. So at that point, you have to cut yourself off, go down, and just go, let's just, let's pipe down a bit and see if we can go back to some normality. Because the markets have a very good way of showing you that you are not a god, and that you had some success, and that you might have caught an outlier day. That doesn't mean you're going to catch it again and again and again and again. There will be a time when the markets settle down, and then you're still trying the same stuff, and you're sizing up because you haven't been wrong, and you're shooting at like 80% accuracy, and it's like, oh my god, this is amazing. And then the day comes when things start going wrong. That is the point where people go crazy. But to me, I'm like, all right, here we go again. So now I need to chill out, go into micros for a bit and not think about it. Just like la la la, don't focus on the profit. So this is why most of the time I will have all of my P&L based markers removed. I've even removed them from my dome. For the tick based display, you do need to go into charts and data, and then there is a chart value display type. By default, that is in dollars. I like it in ticks because I think it and operate in ticks, and that way all of my accounts, whichever one it is, whether it's a 7-figure account or whether it's a 4-figure account, it all looks like the same trade. The executions might be a little different because obviously bigger accounts are bigger size, but not necessarily, right? Sometimes when you have massive amount of volatility, you don't really need more than about 3 silvers, but at times when the volatility is not that big, then you will obviously make sure that your positioning is in line with whatever the risk per trade says. But yeah, that's how you change those. When I am looking at the XFAs, I will block out all of these. I do not want to see P&L. I do not care about profit targets. I don't have profit targets. All I want is just a setup, process, and no reliance on P&L. So I've also changed that in the dome. Hide open P&L, hide join bid because I don't really use them. I'm a market order person most days. I don't want to be wondering whether I'm going to be joining a trade or not. And, I do tend to get involved in areas of like gamma exposure or ADRs or value area edges where there's naturally a lot more movement. But I hide the P&L column, hide basically nearly everything, hide the reverse button. So yeah, the reverse button is only there for me when I'm doing the reversal challenge every once in a blue moon, because they know I'm not a huge fan of it. But yeah, so that's one way to keep you with the process and not trading P&L. I think yesterday somebody asked us, I don't know when, but somebody was asking, if you lost a trade. No, actually it was doing at the buzzer, Coach Jay's and Coach Paul's show. So they said, if you lose a trade, how do you replicate the getting back to break even? And that question to me was just all wrong, because it means you're focusing on the wrong thing, and you're losing a trade, then looking at the red one, and then going, how do I replicate getting back to break even? Is that what you're trading for? You're trading to get back to scratch? Like, I don't trade to get back to scratch. Like, if I have 2 losing trades, I will then be so careful with the third one. I will be like, nah, this one needs to be like absolutely perfect. Everything has to line up. And if it doesn't, I would just walk away on the day. I'm just like, well, it didn't work. All right, next. And the sooner you get into that, like, all right, next, sort of like Ariana Grande mode, thank you, next, and all of that, you will be so much better as a trader rather than focusing on the day when things didn't work out. Just say to yourself, oh, it's okay, tomorrow's a new day. It'll be better. And then if you have another losing day, you'll be like, okay, why is this happening? Are we in a market condition where it's not really playing with my strategy? And if the answer to that is yes, then you either get better trading that new state, the market conditions that are not playing with your current strategy, and you expand your strategy playbook, or you just stay out. That's always an option. So yeah, thoughts on silver. Let's have a look at silver. I didn't do like all the data crunching on silver today because I did not intend to trade it, but for now it's kind of run away a little bit. Silver, silver, silver. Let's have a look at the levels. So we have an interesting level up at, just gonna make sure I'm on the right one. Yeah, up at 85. Anytime this loads, you can load. Yeah, so one of the interesting levels is also 83, but similar to copper, silver is trying to move higher. Oh, this is white. Was that always white? I don't think so. So yeah, we have 85 as a point of interest, 83 as a point of interest, but you can see that both of them have gone higher. So 85 loose area where they may hedge. We are in a positive gamma environment, which means that the moves might be more controlled and not as crazy and more prone to the mean reversion behaviors. When it comes to ADRs, there is no point talking about them because the huge expansion of volatility that we've seen, that's not normal. So now we're in this weird period where the ADRs and ASR are working on a slightly, expanded or very, very much expanded range. However, I'm seeing that the London session for now is only doing 337 ticks. And that's more in line with what we've had. The ADR has fallen from like over 3,000 down to 2,200 very quickly. So I'm guessing that we are actually stabilizing a bit. Of course, everything could go nuts during the NFP again. That's always a possibility, but so for now, it's up until 85. Then we watch what happens. And it's going to have to be just one of those watch price action around A level and just try and see if there's something there. But yeah, it's a weird one. When you start to contract, then the ADRs will not get touched. So that's one of your indications that, oh, hold on, did we have like falling volatility now? So maybe, maybe I can bank on like failed auction or auction fades. Right now, this is strong auction upside, but I never like it when we jump away from an initial balance in one single big move. So this was initial balance and then just jump, because most times this will be a pullback, tag the IB high, or maybe even lower. Like sometimes you have VWAP that cuts through the initial balance. Initial balance is the first hour of range. Part-time Bruce Wayne, share your strategies. What do you think that I do here? I share my levels, tell you my high posts, failed auction, auction fade, neutral day fade, breakout above Asia high, below Asia low. Like, that's what we're doing here. Reversal from ADRs, reversal in a hedging environment from gamma walls. Sharing strategies, mate. That's what we do here. But yeah, so if we ever get down to the initial balance low, maybe that's a continuation higher. But again, I'm a little bit reticent to like get into any trades now because of NFP. Even though I'm in a combine, I don't care. Because there's no real good setup. Maybe if we get some fade on copper from 6 evens, and maybe if silver does the same thing from 85. I'm not trading silver yet here, because according to my stats, I will need to have, for 1 micro silver, the balance needs to be much higher than this. Otherwise, you just kind of ruin all of the profits from the other one with one lost trade. So, you know, you don't want to be doing that. You want to make sure that everything's stable. So I probably won't be trading silver much in this combine until the very end. Maybe once I'm over like 7.5K, then I'll be like, yeah, let's try silver trade. But really, to be safe on silver, the way things are looking right now, the way I'm doing my risk models as a general overview of market risk versus my own risk, I would need $17,500 of balance before I can execute safely 1 silver micro. Whereas on copper, it's a true micro, so you can go, I'm going 4 micros, 5, 6, 7, 8, add. Right now I can only do it to 6, so hopefully the volatility stabilizes and then we can go back to normal positioning. Otherwise it's a little difficult, you know. Where do I get my GEX levels? So you guys can get it from MentorQ. I have my own way of getting them, but they are similar in the way that MentorQ will actually give you all of the interesting levels, but I like to use a weighted calculation where I would go one step beyond to find anchors that are the most interesting levels. I'm not going to go into the nerd side of things, how I do it and why, but there is a way to use Greeks to weigh the levels to each other and then decide which one will be the bigger one. But yeah. AI Traders Club, as a beginner, what asset would you start with? Honestly, I would start with copper, because copper allows you to think. It's a product that mostly moves. Just stay away from it in the summertime, because summertime tends to be like a bit of a meh time of the year, not the day, but time of the year when copper gets very slow. So just ensure that it's moving. Like, let's say you look at the daily ATR, that's similar to my statistical averages, but the daily ATR should be at the minimum 100 points, which is about 200 ticks. So if the ATR is over 100, then you're good to trade it. And then just watch the levels, you know, watch how it's moving. And it's going to move slower, much, much slower, allowing you to think and allowing you to adjust if you've made a mistake. The problem that I have with people teaching others on NQ, and now even gold falls into that category. It never used to, but now it does, unfortunately. So when somebody comes, I want to learn your methodology, I'm going to be trading gold. And I'm like, that worked, you know, even 2 years ago. But now it just won't allow you to emotionally regulate while you're making rookie mistakes. So the point is to remove that emotional dysregulation as much as possible while you're not perfect, neither in your levels finding or playbook setups or execution, right? So this is going to be a lot of mistakes in the beginning. So you need something that will allow you to adjust as you realize your mistake. Some of the faster moving products, they don't allow that. So then people get into this messy trading mode where nothing is working. Their levels are not that great. Or maybe the level is good, but you know, they made a mistake at the execution. Or maybe they want to change position, but now it's moved too far too quickly. And you know, maybe you missed something. Maybe you're going into a breakout trade, but you've had like a lot of TPOs that have been built up. and now it's a structure. So how likely is it that that goes into a breakout? Not very. So therefore you go, no, actually, oh God, I also forgot that maybe we have a 6 evens number there, and that's a big level. So I shouldn't have gone into this breakout. On copper, you can actually adjust. You can kill it, and you can just go, let's just see what actually happens here. On NQ, silver, I would argue definitely gold. Sometimes even natural gas. So natty can be a little crazy. Right now it's actually pretty palatable, but it does these enormous weekend gaps, which are not great. So yeah, I like coaching people on copper because I think it's an excellent product to hone your skills. And even when you've been trading for a long time, you know, it's such a smooth product. It moves a decent amount most of the year. There are obviously going to be, like, I think July and August and a part of September tend to be really slow on copper, so I move to something else usually. But yeah, copper would be my choice, definitely. I heard anchors were effective in trading. Is it the same as pivot points? It's better because they're actually open interest levels. Pivot points to me are just like, oh yeah, it's the average of these numbers. I never really resonated with anchor points, with pivot points for that reason. And they kind of fall into the old school way of like moving averages with RSI, MACD, and pivot points. That sounds so old school to me. It sounds like something that you would hear at a trading seminar that you paid $15,000 for, and it's lasting for 3 days. You know, one of those. Like you go to a seminar, they fleece you for money, and then they teach you the sheer basics. And there's still that going on in the trading industry. So to me, I was like, no, man. Or when they start with, this is a candlestick. I'm like, I know what a freaking candlestick is. Can we move on? All right, about to reach 6 evens. Let's see how it behaves. But yeah, so to me, I wanted, when I became an intraday trader, I knew everything. I've already had success making 6 figures from 2007 till about 2012, and then I ran into a period where Forex died on me completely. Right, they're pushing so far, but let's see. Sometimes they overshoot, and then they settle down, and then they go back the other way, but we'll see. The other metals are a little strong as well, so I'm not really itching. Also, silver is not at 85 yet, and gold is not at 5100 yet, which would be like the equivalent levels depending on the correlation today. So copper overshooting, not a surprise. So no move. No, I'm not doing anything here. I don't really suffer from FOMO. If it doesn't do what I want it to do, I wait. You know, I'm very stubborn with my levels. I'm exceptionally stubborn. I mean, I'm stubborn in general, let's face it. But levels, I'm like, no level, no trade. No level, no. And that's a mantra that I think as a trader you have to have. No level, no trade. The end. Can we make that like the new motto, the new slogan for this segment? No level, no trade. Where was I? Yeah. What's the plan to get back on track with consistency? Just keep trading. So the consistency rule is not a hard rule, so you won't like lose your accounts or anything. It's just you have to keep trading for another few days until the 600 is no longer over 40% of the total profits. So it's just keep trading. That's the only thing. There will be no impact on your future payout like some firms. It's just that you've overshot consistency. You need to keep trading. And then when that consistency falls below 40%, you will be eligible for a payout again. Make sense? So don't freak out. It's not like they're going to flag you or something. They don't do that. They really don't. Can we look at CL? Well, I looked at it when I was looking at RBOB, but we can look at it again. I'm not interested in CL directly. I'm interested in RBOB. It is sitting just under 65 now, and I've looked at the open interest 2 days ago, so I'm going to look at it again. Just to see what they're doing. Crude oil is also going to come into rollover, so yeah. Yeah, we lost more open interest. So daily change was 9,000 open interest contracts were lost. Since we were going up, that means that the upside could be losing steam. But open interest readouts become a little bit tricky around the rollover period. I am short biased on RBOB and crude oil. I will not be trading crude oil, but I do trade RBOB. That's like its twin, but only with a lot more ticks to offer. Still looking at it at these like 199 and 2 evens level, which I suppose would be equivalent to 65. $65 and $65.50 would be the less crazy equivalents on crude. And yeah, it's losing steam here a bit. Now there is a setup that I like to do whenever we sort of run away during the London session to the upside especially. I like to normally fade that into NYMEX. Today we are actually extending RBOB to the downside. What's crude oil doing? Crude oil is trying to fail the auction, right? So today this is not really looking like a fade of the big big move up on RBOB yet. So no setup there. Because I don't like to be long going into the overlap between the London and NYMEX session. Plus there's VWAP here and we're above VWAP. So it's not time yet. So yeah. Looks like I'm going to be waiting until after NFP to do anything today. Yeah, Traders Club says excellent information. Thank you so much. You're very welcome. Very welcome. Just don't expect corporate to be whipping around like the rest of them. So less drama, smoother momentum whilst you're learning. And once people start watching copper, they're like, I see why you like it. Like, yeah. Are you not a fan of trading ES? No, I find equities a bit boring, to be honest. I do trade DAX because it's a little bit more double-sided than some of the other equities. ES to me is an end-of-day product, but I'm a commodities girl. You know, I'm not like I don't see point in equities. Like I have a portfolio. Whenever they go up, they just keep going up, and I'm like, great, awesome. When they're going down, maybe I'll be putting like protective puts or something for a time. But I'm not, you know, I've never really been interested in equities. Part of that dislike comes from the fact that when I sat down at a prop desk first time, ES was moving in the range of, I kid you not, 20 ticks per day. That was 4 to 5 points of average per day. And I couldn't, for the life of me, understand why people were trading that. Because I like smoother movement, but I still need like 10 times the amount of that to actually feel comfortable in a trade. Because I am a swing trader, right? I look for intraday swings wherever I can find them. At the same time, over the years, I've become better at trading ranges. So now I don't really care what type of a day we have. However, once the swing opportunity presents itself, I can recognize it and take advantage of it. Does that make sense? However, with ES, at the time when I started trading it, I was like, why do people trade this? I don't get it. So they were like, okay, you don't like equities. No, actually, before then, they tried to put me on fixed income, which was even worse. It was like, I remember going to like gym during my lunch break, put on a trade, came back. It was like 2 ticks in profit. And I'm like, after an hour, it's moved whole 2 ticks. I mean, wow. And I just didn't like that. So then they moved me to an equities desk. They're like, okay, well, these are more volatile, slightly, more movement. And I was like, you call this more movement? Like, yeah, okay, it's 20 ticks, but seriously? Why do people do? I just couldn't get it. And then they said, all right, so maybe you would be better, on commodities. So let's maybe put you on the energies desk. So that's where I found crude oil, natty, so natural gas. RBOB and heating oil were more reserved for the crack spread guys. They weren't really the thing that I was doing. And at the time, crude oil was moving massively, which kind of stayed for many years. But yeah, so I fell in love with crude oil back then. But back then, crude oil, on average, was moving 300 ticks per day, nearly every single day. Like the quiet day on crude would be 150, 180. Now, quiet day on crude is like 50 ticks, and a standard is 100. To me, that's too low. So I look for, let's say, moderately volatile products that are also smoother and are not whipping around intra-candle like crazy. But yeah, so my dislike for equities comes from many years of watching ES just do absolutely nothing intraday. But still slowly crawling to the upside. And do remember that at the time when I was becoming a prop trader, 2013, 2014, we had the aggressive quantitative easing program in place, and it was all about tapering, Bernanke, and tapering. Every Fed meeting was like, are they going to taper? Are they going to taper? Are they tapering? Are they tapering? And it was a funny time. It was after the credit crunch and stuff. And I don't know. Me and equities don't really gel that much, especially not ES. And YM I quite like. So YM is something I occasionally pop into. But for the London session, these streams were supposed to be DAX focused, so Eurex. But they never brought them to us, so... Then I got stuck doing metals at the time of day when metals are not doing all that much on most days. So we're going to be changing that very soon with this whole little refresh of the look that we're doing. Hopefully we can bring you the new time of day that is going to be covering the London Metal Exchange Open. So we're going to be starting 40 minutes before then, and we're trying to get that done. And yes, I know I've been talking about this time slot change since September last year, and again everything takes a million years to get going, and this is what happens when you're growing as a company. So there's definite positives, but at the same time, we who have been with Topstep in some shape or form for 10 years and the Topstep TV forum for like 2.5 years now, we had a lot of adjusting to do with the amount of people that are now a part of Topstep. So we're all like, okay, another new person. Awesome. But yeah. What is my take on trading currency futures? I hate them, absolutely hate them, and this is coming from somebody who swing traded currencies from 2007 till 2012. I think they are maybe suitable for somebody who's looking for a few ticks here and there. Every so often when there's releases to make them move a bit more, they might be interesting every so often, but frankly, I haven't looked at currencies apart from like, hey, what's the dollar doing sort of moment, or what's the pound doing, because I've got to do some kind of a conversion in the transactions, and I need to know how much the bank is going to hit me for with the charges. Aside from that, I haven't actually looked at them. Like I said, I'm a commodities focused trader. I am totally in love with commodities, metals, energies. So yeah, any kind of raw commodities. So any kind of hard commodities that can be derived from Mother Earth. That is me. Okay, and then you have soft commodities, which is like anything you can pick above ground. But hard commodities and raw commodities are my baby. It's my baby. NQ does the job. The problem with NQ is that it moves around horribly. It's like seizure inducing. And remember, I'm not in my 20s. I've been doing this for 19 years. I stay away from drama in all shape and form because like I don't mind conflict, but I find that it raises the stress levels of everybody. And unless I'm like intentionally trying to rattle somebody's cage, I generally don't get involved in conflict. But I do like rattling people's cages. And NQ rattles my cage because, you know, when I open up Bookmap, it's way too quick for my old brain. You know, I'm mid-40s. I've been doing this for nearly 20 years. There are just certain price action patterns and the speed of tape that I just can't be bothered with anymore. I used to trade NQ more, like 7 years ago and stuff. Even 4 or 5 years ago, so, you know, ballpark 2020, 2021, I was still trading NQ here and there, but it wasn't like, oh yeah, let's look at NQ every single day. It was like, towards the end of the day, let's have a look at what they're doing. But then, I don't know, it's just, it's one of those products that you can't hold, and I think that's why I have a problem with it, where I like holding my trades for hours. NQ, you try and hold it during regular trading hours, unless you like zoom out to like 2-hour chart or something and then just leave it and not watch it. It's very difficult even for me to stay in on a trade on NQ because it moves up and down, up and down. It's undecisive intra-candle. You know, it's like right now it's probably a quieter part of the day, but again, when I was looking at it last year, the average session range for London was 18 points. Again, I'm not trading things that are 18 points average range. Now it's probably a little bit better, but yeah, so this is calm. But during regular trading hours, a 30-minute time frame has this penchant to wag around, wag around, wag around, wag around, up and down, up and down, up and down. You don't get this, like, look at the smoothness of copper. It's been going up. And it's just going up. It's solid, right? It's like, and NQ is like up, down, 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 up, up, down, down. And that just irks me. It irks me. And I can't emotionally regulate when I'm looking at NQ. I hate the bloody thing. And that's why I don't trade it. It's not a product for me. If you love it, keep trading it, man. No problem. Just know that if you are a beginner, not everybody here, but you know, we've had some beginner questions. Just know that when things go wrong on NQ, they really go wrong. So whilst it can be great for profits, we need to be risk-minded first. And if you find that you're struggling on NQ, the first step is move away from your NQ. Don't talk about NQ. And the amount of traders that came to me trading that bloody thing, and then I moved them away from NQ, and they suddenly became this beautiful trader who are, I can count them personally in like 100 people at least that I've personally met, where I said, have you tried trading something else? Try YM. So they try it, they like it better. Some gravitate back towards the ES market. I think ES is a little too slow for me, frankly. So yeah, I just look for that sweet spot of, you know, something that is double-sided, not boring just to one side. Commodities offer me setups intraday, even if I like miss one, it's fine. What's my favorite commodity to trade? I don't really apply. You know, I love copper, I love RBOB, I love natty. I don't think that I would I would be applying feelings to a product. I look at data. What is moving? What is appropriate for prop accounts? And how can I limit risk? And what is moving, right? So my love for something throughout the year will be heavily dependent on data. I know it's not sexy, right? It's not particularly sexy, but that's what happens. Sometimes I'm having an absolute love affair with RBOB, right? It's not a person, it's gasoline futures, RBOB, which stands for, I always forget, but it's like reconstituted something or other. It's a reformulated blend stock for oxygenate blending. It's a very, very catchy name. But we call it RBOB, right? Because, you know, that's the abbreviation, and it's just fun to make jokes saying our Bob instead of RBOB. And then on other times, you know, you will see me be absolutely in love with silver, right? Because silver will be like, oh my God, it's so smooth, and yet it moves. It's amazing. And I can trade it after COMEX. So yeah, my, you know, like or dislike for something will be always shifting throughout the year. But I don't look at, you know, a million products. I'm not like I'm going to be sitting here one day and go, let's look at soybeans. I don't know anything about soybeans. I have never, like, I think maybe I popped in one trade, maybe two, just to see what the tick size is. But, you know, I've never traded ags, and I don't really know anything about cattle. If I want to trade cattle, it will be because Coach Hoop told me something, and I'm like, yeah, let's have a look at it. And I have actually traded cattle, and you know, I found it okay, but I also found it a bit one-sided. Like, if you miss that one move, that will be it, and I'm bothered by that. You know, I want something that is fluid, that is more, you know, more double-sided intraday, so that even if you miss the first move, it will still offer you more opportunities throughout the day to get into the trade, to an equal strength of the setup. Does that make sense? So yeah, for me, things that just kind of move once and that's it, I don't really resonate well with those types of products. You know. Yeah, I mean, NQ made a lot of people profitable. It's just that I was profitable on it as well, but I had a negative risk reward on it. Can you believe that? 0.8. Wild profitability, but 0.8. Why? Because I couldn't hold on to trades. And then I realized that, yes, I'm profitable on it, but I didn't hold a trade. And yet it went to bloody 5R. I need to start saying that word because it's starting to bother me. It went to 5R, okay? You know, I would need to do I don't know what in order to be super calm and be able to stay in on NQ. So I get it. You know, I totally get why people can't achieve emotional regulation and positive risk reward, because I couldn't. But, you know, it's just a matter of personality, I think, at the end of the day. If you are fine with it, and if you're doing well with it, and you find you can limit risk with it, I have no problem people trading NQ. Like, we've had traders who are extremely emotional, like diamond hands. Amazing, right? I would never in the wildest dreams say something like, oh yeah, you should be trading NQ. No, he should. He's able to hold trades. He's super calm. He's amazing, right? It's amazing. But somebody who is jumping all over the place, losing themselves, then they're like down $3,000, then they're up $2,000, then they're up $7,000. So they see, oh yeah, it's all good. And I'm like, that's so much risk of ruin, and your variance is like sky high. This is never gonna last, right? I just look at it from a data perspective point. It's somebody who was at one point a risk manager, right? So I'm just like, that's messy. It's very messy. So, you know, my dislike or like for NQ simply comes from my own perspective, right? And my experience of working with people, where I've seen 90% of people who come to me, they're like, oh, but I love it so much. And I look at their data and their stats, and I'm like, but you're really doing badly on it. But I've had this one big day, you know, they're remembering some big day that they achieved on an outlier day that happens once in a blue moon. And I'm like, yeah, but what's happened since? Loss after loss after loss. Then you were up $4,000 on the day, and then you went all the way down to the stop loss or loss limit. That's not a good thing, right? Why did you do it? Oh, it looked good. That's not data. That's emotional dysregulation. So that's the thing that I'm trying to illustrate here. If you are finding that something is, you know, putting you on tilt or on high confidence level, that at some point of the day breaks down and you're not able to keep your profits, yeah, you shouldn't be trading that product. Whatever it is, whether it's silver, whether it's NQ, whatever it is, let the data speak for itself. And then go back into your introspective analysis. If you don't know what introspection means, it's looking inside of you and looking to your emotions and how you feel in a trade. That's more important to me than any number of ticks that something moves. I'm like, how do I feel in this trade? But I also know that I have two extremes of that. So I have the extreme when things are flying around like crazy that I have a problem with, and it raises my cortisol levels. You know, I'm no longer that young, so I need to make sure that that's not a problem. Because again, I want to be here for the next decade, 20 years, 30 years, possibly, if I'm still alive. But then on the other side, I also know that I have a mental trigger when things are not moving enough. You know, you get me into currencies and I open up a trade, it's doing nothing for like 2 hours. I'm not going to stay in a trade that's doing nothing for 2 hours, okay? I will stay in a trade that's giving me something for 2 hours, absolutely. But I will want 110, 150, 200 ticks, 300 ticks out of it. I'm not looking to have super long hold times with zero, with diddly squat to show for it, yeah? So I'm looking for that sweet spot. When I have a good setup, I can stay in on the wave for as long as the market allows me. That's my strength. Is it also my weakness? Absolutely, because I can stay in trades too long. And very frequently, you know, I would be, when I'm like slightly off my game, I'll be calling Coop and I'll be like, Coop, I held the trade too long again. You know, he is my trading buddy, you know, we talk a lot. And I will be, you know, moaning to him to, whenever I hold the trade, for way too long. I'm like, did it again, Coop. And he complains to me as well. He goes, I've done it again. I overtraded. I gave it all back. What am I doing? And then we kind of talk things through. You know, it's very important to have a trading buddy to talk things through, and not one that is going to moan with you, right? So ideally, you have to be on polar opposites of the spectrum, because you can then provide a little bit of insight of how to improve that, and it's a lovely thing having trading buddies and having somebody to lean on the days when things didn't work out or you had a Muppet moment, which is absolutely fine as well. We'll all have those every so often, as long as they're not every day. What happened with gold? Nothing happened with gold. What happened with gold? Gold is doing the pre-NFP craziness, so somebody's buying gold and all the metals, actually. They're buying all the metals ahead of NFP. That means that maybe they're expecting something that we don't know. Like, what do they know that we don't? Only one godson says, I used to trade CL, now it's NQ, That sounds like my stack, dude. Just replace NQ with RBOB. and you pretty much have the tradable instruments that I do. So yeah, this is going to be a little irrational into the NFP release. So right now they're obviously thinking that the NFP is going to be maybe bad, and therefore they're buying risk products. In fact, they are buying a little bit of natural gas. They're buying some RBOB. They bought some crude oil. We know that. But crude oil is now settled just under 65. And yeah, so I don't know. We'll see. I don't really want to do anything before the NFP. I have my levels, you know. Some of them might get overshot because of the outlier aspect, especially maybe metals. But yeah. What direct impact does NFP have on metals or market in general? So metals and equities will be the most impacted. They go absolutely bonkers for about 5 to 15 minutes. So don't expect that you can hold the trade smoothly and not get stuck with like a whole bunch of slippage that's working against you. I don't want to hold anything into it. It's not professional. It's gambler mentality. Oh well, if it hits, it hits. Yeah, it's gonna hit, and then you might get stuck in a position, especially in the prospect of velocity logic, where let's have a look. I mean, do you want to trade this? This is the gold dome. Let me make that a bit wider for you guys. What's on the order book? And we want to keep it professional, but I'm just going to say F all is on the order book. There's nothing there. That's dangerous market conditions, right? Because when you don't have anybody on the other side to take your order, that's how slippage happens in the futures markets. And if that slippage is just rife everywhere, I mean, silver full contract not looking much better. Silver micro looking a little better, but still a lot of gaps. Until that populates properly, you really shouldn't be trading it. So we're going to stay out. Micro copper looking okay. Full copper still looking okay. So again, out of all the metals, copper seems to be the most liquid at this point when looking at the order book. But yeah, just do like the basic checks of gold and stuff. I don't trade things at this time of day, especially before NFP, when they're looking like this. But I will trade RBOB because RBOB is pretty thin anyways at the best of days, and it looks gappy all the time. But my stop loss accounts for that. I don't trade RBOB these days on like a 30 tick stop. I trade it on an 85 tick stop. So therefore, it has time to find liquidity somewhere. And I very rarely get caught in slippage. Sometimes there's a bit of slippage, of course, because it's a thin product. But I don't trade it much super early in London. I will trade it in the overlap when we start getting Americans waking up and stuff, trying to like put positions on. And then as the day goes on, I will usually do most of my trading between 9 a.m. Central and about, let's say 12. So noon would be like my first sort of break when I go and do something else, have a rest. Sometimes I have a little nap, just a shut eye to refresh my brain. And then I come back for the last 90 minutes of the day, which is typically NYMEX products. Yesterday I had troubles with my computer. Just as I entered the green room, my computer decided not to reboot. So I quickly had to scramble to get the laptop out. And we watched the natural gas settlement fade happen without me. Even though I had the 320 level, I even called it. I was like, yeah, I'm looking at this 320 level. But then because I only had barely 2 screens and I had this, obviously OBS. Oh, I didn't have OBS in the end because it was just a regular camera. But yeah, I was just scrambling around to get things working, and then it was just too much, right? But we watched it. We watched the fade, here it is, settlement fade, happen. So exactly what was supposed to happen happened. I just wasn't able to be in on that. And NFP can put a bit of a wrench in the works in the beginning of the session, so everything's a little bit jumbled. And the initial reaction at the New York Stock Exchange Open can also be pretty dependent on whatever NFP did. Once all of that is out of the way, you can actually use the additional volatility and liquidity that starts coming back. So the lifeblood of the movement starts coming back via the contracts and stuff and liquidity, and you can actually get some really, really beautiful trades. If there's a massive surprise of NFP number, that tends to lead to repricing movement that typically lasts most of the day, sometimes even longer than that. But NFP trading exactly into it, D says just don't do it. Who's D? That's me, right? So basically it's just gamble, right? Keeping your position open into a release. I know that Topstep allows us to do it. I know that we can. Doesn't mean you should. So, again, you do you. I'm not telling you what to do, but to me that would be like, look at this gambler. Maybe if you're in natural gas or something, or soybeans or something that just really doesn't have much connection to the jobs report. But yeah, metals, equities, they go absolutely nuts. And then energies, a little bit, you know, shaky, but nothing like the equities and metals. So yeah, be very careful. Oh, AI Traders Club says, that's the first I've seen direct reference along with the order book and explanation on how slippage happens via the book. Really, I mean, I thought there was something we talk about on Topstep TV all the time, but I don't know. Do they not talk about that? I'm pretty sure Hogue and JD and the guys talk about it. In fact, I saw JD talking about something similar the other day. We always have the DOM, we always have level 2 data. But yeah, I mean, I suppose I tried to explain it in more layman's terms. It's like gaps, gappy, you know, there's holes there. You don't want to see holes. Unless you're doing DOI project. For NG, Joe, hey, I saw your email, by the way. All good, no problem. It's actually 2:30 p.m. Eastern. So the start of the setup should be 1:30 p.m. Eastern. So that's when you start looking for the setup. But for NG, that movement doesn't come sometimes even 2 minutes before settlement. So, you know, you really have to watch price action. You cannot wait for 30 minutes or even a 15-minute close. Purely because you will miss the move. So, case in point, here's one from last night. Here's one from last night. Last night. If you had waited for the full 30-minute close, you basically missed the move, right? But if you get into a 2-minute time frame, and go back in time. Here we go. Here it is. So I start looking at this already from 1 p.m. Central. 1 p.m. Eastern, because Joe, you're Eastern. But I really aim not to enter a position until 30 minutes past, if I can help it. Yesterday it happened a little earlier because we actually had some Trump comments, so that kind of brought the position to tag this, and then they hedged it from a moderate call wall immediately. But yeah, using something like 2-minute, 5-minute chart, that's what I will be looking for, and then I look at tape as well. So I will be looking at tape to see when they start to engage. So in a way, I don't even need a time frame, if that makes sense. If you're looking at tape and you know what you're looking for, I wouldn't. But if the price action is all you have, then you need to have some sort of rules. So for example, for me, the very decent movement on a 2-minute time frame was when we created this third candle, effectively a 3-bar reversal. This is a three inside down, kind of, but yeah. You can have a look at the all-day loops, so you can go to 3-minute chart, J style, and see whether there's something there. And here is that same thing. How did it look? It looked like an inside bar and then a 3 inside down pattern. This is what that's called. So you have one big candle, you have one bearish candle, and then another bearish candle. How is this different from an evening star? Evening star has a doji in the middle. I'm actually pretty big on price action reading this way, again, because I'm nosy. But generally, I am also looking at tape. Let's have a look at 5-minute chart development. And as I'm doing this, you will notice the fractal nature of the price action. So what do we have on a 5-minute chart? We have the tag of 320, obviously overshoot. We have a bearish candle, and then you have a continuation down. So even if you use the 5-minute time frame to look for your setups, let's use a fib retracement here because I hacked it to show me. Stop would need to go above the 320, ideally above this wick as well. But sometimes if the wick has already happened, I will actually be pretty happy with just doing this because you're catching it down here. It's pretty far away. And then you get at least 1.5 R. But based on my tape reading, I will be watching this and waiting to see what happens. And typically I can catch them on the equivalent of like a 1 minute reversal. Why? Because I can see them plowing in with volume, and then usually I can execute a trade that will be looking like something like this, because you're watching for failure. So the assumption is that the trade is going to fail, the hedge is going to be on as we try to wick through it. And then usually some of my trades, you will see them looking like this, and that's purely because of tape. It's not because of price action. Because I see an increase in volume, maybe I saw some absorption, maybe I saw the sweep, and then I saw that delta was not following the sweep. That's a bearish divergence in delta, and then I get in, and then they're like, people are like, Dee, how do you get your trade so early? That's how. It's not just price action, it is actual tape reading. But that takes so long. It takes a long time to get good at it. Like 2 years lead time looking at it every day and systematically recording your screen, comparing it to a price action. That's what I did. Yeah. I mean, I'm totally obsessed with this job. I love what I do. Don't care about P&L. I just love playing detective every day. And I'm like, what's it going to do now? Maybe that makes me crazy, but, it's what's kept me in the game. Do I use options data just from futures instruments? For me, yes. I will only refer to the indexes and the ETFs if I don't have enough futures data. So, for example, Dow doesn't have much options data. So you would have to maybe refer to like converted levels from something else, like maybe SPX or SPY. DAX index, also not much options data. Like Eurex has some options, but it's not really significant enough, so I will use the DAX index that does have options and then convert them into futures using the basis difference at the time. And so just working with whatever you've got. Just gonna let the Cavalier out because he's scratching. Thank God we have the music playlist, eh? Do I trade bonds? No, absolutely hate fixed income. Bonds to me, unless you have a monetary release like today, NFP or FOMC or something, they are painfully slow, man. And the reason why there are entire prop firms that only do bond spreads is because it's such a slow movement. It's a very thick market as well. So you see how gappy RBOB is? Let's have a look at one of the bonds. Look at the book, the order book, and the sizes on the order book. And it will stay at 116.21 forever. Like you will start wondering whether your internet is on and whether things are actually moving. It just doesn't move. Doesn't move. But when it does move because of monetary releases, then it's fine. Again, I look for the sweet spot of products that move every single day almost to an average of at least 180, 200 ticks. And that's been like that for years. Anytime the product starts falling way too outside or under that number, I'm ditching it, right? For the time being. And crude oil, unfortunately, has fallen down to $1 on average on most days. And I stopped trading it about, what was it, like a year and a half ago? And for now, I don't see a reason to put it back on the map either. All right, so nat gas is very quiet. Copper is slowing down now. But yeah, so this is the difference. And if we take any other bonds as well, so let's see if we go ultra bond. Same thing, 296, 303, 717, 691. That's a thick market. And that's what we mean when we say it's a thin market versus a thick market. Now, ES used to look like that, not maybe 5 and 800, but it used to have like regularly 80, 100, 120, and then the bigger orders back in the day, it was like 1,000. Now it's gone a little less. So let's have a look at the ES tape. Let's widen it. This was crude oil tape 30, 5, 20. So ES has gone from a very thick market to a or moderately thick market to almost a thin market. But it's not that thin. You still have a decent amount of liquidity. But I would argue this would be easier to move because of the lack of contracts per price that makes it whippy. Now, NQ, the reason why it whips around like a thing is because it's also thin, right? Look at it. 1, 2, 3, 4. This is also a thin order book. And it is NFP day, but it's been thin. It's been thin most of the week. I think when I was on with Anne-Marie on Monday, it was a little thinner, but not this thin. So the big boys are not around. They're waiting. Who are the big boys? The institutions. And then you have the extremes here, like GC, that has so many gaps. And arguably RBOB, right now, very thin. No contracts per price. That means problems with liquidity at the moment. Crude oil, middle ground. Kind of looking like ES, right? But it's this is not great for crude oil movement, and they are keeping it artificially pegged. Like I am gonna die on that hill, because I think that crude oil should be more volatile as a commodity product, and they're just not letting it. They're just like keeping it range bound between like $70 and $50 because that's their sweet spot. But I'm not gonna trade that outright, anyways. I might pop in an option when we get to 70. But only if everything lines up and if we start to lose open interest. But the implied volatility is still high. So, you need to make sure if you're doing any sort of options trading, like depends what you're doing. If you're just doing like market neutral strategies, then you don't need much. You just need it to stay, reasonably contained, either below or above the strike that you chose. And then because you typically have protective, it's like, credit spreads and stuff. And, debit and credit spreads, that's what we were talking about. It has to like stay in a reasonably tight range, but you don't need much movement because the goal there is just to pick up the premium, the net premium difference between the long and the short. So that immediately like caps your profit to the net premium received. Anyways, let's not talk about options and let's carry on. But yeah, I've got nothing else really to say. I think this was a nice conversation about thickness of the products and how it all works, why we shouldn't be blindly opening positions into NFP and then complaining that Topstep X is not working, because it ain't Topstep X, it's going to be the CME. And silver, similarly, it's very, very thin, moves so much. So just wait, you're not going to miss anything. There'll be plenty of opportunities, especially if it's like a number that they're not really expecting. If it's a number that they're expecting, then it's like business as usual, apart from the huge shakeout that happens at the beginning. And then you can just look at it as any other day, really, once the release is done. So yeah. Anyway, let's finish it up and let's wait for NFP to happen. Thank you so much for being here with me. I really appreciate it. Hopefully we all learned something new. Let's see what the day brings. Yeah, so I'm going to be watching Copper, RBOB, and Natty. Those are my 3 chosen babies for the week. And we'll see which one actually brings us something on the day. I will see you for group coaching later. That will be at 6 p.m. GMT, 12 p.m. Central. Until then, I'm Marcus Stalker D. This was the Eurotrade on Topstep TV. Take care.